If your profile looks like this, or you just don't know what risk profile you fall under, this video is for you. I'll guide you to better understand your own risk profile. Your risk profile is how much risk you can take on. Your risk profile is centered around three things: your objectives, your ability to take risk, and your willingness to take risk. Your objective is how much money you want and by when. Your ability to take risks depend on variables such as your time horizon, job stability and dependence, and your willingness to take risk refers to how much loss you can handle. To find out what risk profile you fit into, you can ask yourself these questions. Number 1. When would you like to withdraw your money? Number 2. Are you investing to grow or protect wealth? Number 3. What is your required growth? Number 4. How much loss can you tolerate? Number 5. Do you understand the investment? Number 6. Do you want capital growth or passive income? Number 7. How old are you? Number 8. Do you have any dependents? And finally, number 9. Will your income grow or reduce in the future? Based on these questions, you will fall under one of the following risk profiles. We have low risk, low to medium risk, medium to high risk, and then super high risk. Can you match yourself under one of these profiles? Here is the suggested asset allocation for each profile. Note that this is not financial advice. This is just a guideline that investors can follow. Okay, so first we have low risk. Now low risk is obviously the safest option. Let's see how this is divided. We got 35% of your portfolio in shares, 10% in cash, 20% in bonds, 25% in real estate, and 0% in cryptocurrency, and lastly 10% in commodities. We're moving on to low to medium risk. Here we have 35% for shares, 5% cash, 15% bonds, 30% real estate, only 2% cryptocurrency. You just want to be slightly touching that area, and then 13% as the rest for commodities. Now we're moving over to medium risk. For medium risk, we have 45% shares, 4.5% cash, 9.1% bonds, 31.8% in real estate, 4.5% in cryptocurrency. Now we're going a little bit deeper into cryptocurrency, dipping our toe a little bit deeper, but also 4.5% in commodities. So if you want to go high risk, which is more risky, then this is what I would do. I would put 70% of my money into shares, 0% in cash, 0% in bonds, 15% in real estate, 10% in cryptocurrency. Be careful of that. And lastly, 5% commodities. Next up, and also lastly, we have the super high risk. So for super high risk, it's pretty simple. 70% into shares, 0 cash, 0 bonds, 10% real estate, 20% cryptocurrency, and 0% commodities. This is very risky, and I would not advise a lot of people to do this. This is for the people who have money to play with. This should not be taken lightly. It's not something to just mess around with. If you are just starting out, I would highly suggest the low to medium risk. Guys, that's this video. Thank you so much for watching. If you did find this useful, please share this around. If you liked the video, please like it so that I know this type of content is something you guys find entertaining as well as useful. If you want to stick around for more investing videos or money type content, please hit the subscribe button. I'm bringing out loads of content, and I just wanted to say thank you from the bottom of my heart that you sticked to the end. If you did, I really appreciate it, and I will see you guys in the next video. Until then, it's been Dion. Goodbye.